KENGEN, although to Kenya Power.
Yeah, I think we can combine the two.
Yeah.
Because I remember an interesting observation that we made when we had KENGEN as stock of the week. This was, I think, in episode 7, if not 8. Please check that out. You'll learn a lot about KENGEN. We drew the observation that if you look at, for the past 10 years, if you look at the Kenya Power stock, the curve of the share price, and adjacent to it, you have the
Kenya
curve
Power.
of the share price of KENGEN, you find there's a huge correlation. So if KENGEN goes up,
Strong,
Kenya Power, So because I mean, as it's known that if you look at how the power ecosystem, the energy ecosystem in Kenya, KENGEN is the producer and Kenya Power is the supplier and the seller in this case. So, and KENGEN's largest customer is Kenya Power. So that's where the correlation comes in.
KENGEN and Kenya Power, similar to the story of Ruth and was it Boaz? Where you go, I shall go.
Oh, you know,
Your profits will be my.
I didn't
read spiritual books.
I didn't. I was struggling to get the correlation.
Where you go, I will go. Your profits will be my profits.
But not really.
Share price, my share
But not
price.
really. Someone has been doing well, while the other brother.
The other one.
No, so they are following.
No. KENGEN has been okay.
KENGEN is a stable company.
And
really
then
good
Kenya
company.
Power has had its own issues. So I was actually impressed when they gave a pre-tax profit of 5.7 billion.
This is
Kenya Power. Yeah, pre-tax profit of Kenya.
for the financial year.
For the half-year trading period ended 31 December.
This is from July to December 2020. Okay, good.
Yeah,
2021.
So it's 5.69 billion pre-tax profit compared to 332 million in
the previous
in
financial year.
2020.
Y on Y.
Yeah. So they say that the growth is mainly attributable to an increase in sales, enhanced system efficiency, and lower operating costs. So there was an 8.7% growth in energy sales, which 8.7. Okay, it's good, not too bad. So I don't know. I'm trying to think what drove the increase in energy sales.
When I saw that, I immediately thought it was just a price increase. The price increases.
Actually,
Because last year we were talking, not last year. Yeah, last year. Sometime last year. I can't remember exactly what episode it was. But you're talking about how high the electricity, the cost
power
of
is.
electricity is in Kenya.
Okay. Granted.
No. But this is not electricity sales in terms of revenue. This is electricity sales in
units.
energy produced units produced. So
Do you know what?
Gigawatt
Do you know what, Kaya?
Gigawatt
Yeah,
I'm
so-
attributing that to simply the growth of the economy.
Economy, yeah.
Because I'm looking
Is
at
it a growth of the economy or a resumption?
it's actually resumption. It's actually that's the correct word. Resumption. So if I look at 2020, for example, let me give an example as simple as a place that does fish and chips in town. Okay, so you find, for example, Sanford. So in 2020, when people were really staying at home, nobody was going to town. Very few people. You find that Sanford, their sales weren't good. So the amount of electricity they used to make chipo. They use less electricity because at the end of the day they're selling less chips. Okay, but then now come 2021 when the economy has revamped, so the demand for chips, people are going to town and everything, so sales are up. So the amount of power they use is up. So you can correlate this to now large manufacturing, large industries. That's what I attribute to. Transport, electric vehicle, OP bus.
No, that's not significant.
That's too perfect.
Yeah, it's not significant because it's actually the large manufacturers who really drive, Kenya Power. Kenya Power can actually see that the largest revenues comes from this, and they can actually pinpoint. Pinpoint. But Dan, for me, I'm not happy or excited as you are, and this is simply
It's not
because
really excited. Just impressed that they did not.
I am not impressed. and here's why I'm not impressed. Because I'm looking at these results and Kenya Power has made a profit. And there's a significant increase in PAT. But this is at the expense of a bailout. There was an expense, there was a bailout from Treasury to Kenya Power in 2021. So look at it this way, Dan. If this was just another conventional, a private business, that they are running. Today we'll be discussing our stock of the week is Flame Tree.
Yeah.
So if this was Flame Tree, a private company, no bailout from anyone, they wouldn't have gotten that profit that they've gotten, that 5B. And then come back to this. Last year, we were really excited at the time to hear that, President Kenyatta's declaration that we would have a Christmas gift of 33% reduction in power tariff cost. But then that, of course, didn't happen. The opposite happened. In December, we had a 2% increase in the cost of power. So that profit was not inclusive of the promise of President Kenyatta's promise. The promise came in this year, I think in January, when the tariff, they now put it 15%, not even the 33%.
Yeah.
So now this 15% done, look at it this way. They're cutting the tariff, and at the same time, they're not doing anything at the back end in the balance sheet. Okay? Because PPPs, the negotiations that are being done, I heard the current energy minister now, Ambassador Monica Juma, has held talks with 77 PPPs. Independent power producers. IPPs, sorry. With PPPs. So now in this 77, they still haven't agreed on any reduction. Okay? On top of it, so if you are to cut losses again to accommodate, if you're to cut costs to accommodate this 15%, and a low-hanging fruit would be the payroll. But then we've heard that at the union, Kenya Power, they've said that all of them watagoma if there is anyone being laid off.
Yeah.
Now, Dan, I'm wondering, there's nothing that is being done at the back end to accommodate this 15% that the 15% hit that the revenue will take.
Yeah.
Now, I'm seeing results. Yes, it's good, 5 billion. But then I'm looking at the outlook. Now, the results from January to June 2022.
What are your fears, though?
I'm looking at the profits. Probably it might go even on the other side of the number line. Because nothing is being done to accommodate the 15%.
That cut in. Okay, it makes sense. I think the move to cut power costs by 15% was clearly a populist move.
Yeah.
Especially in
one of many.
It's a political move.
In an election year.
One of many, yeah.
So it does not seem driven by unit economics or the business economics of Kenya Power.
Yeah.
And probably such declarations can be made because Kenya Power is I don't want to say, is it a state? Since it's listed, does it qualify to still be a state-owned enterprise?
Yes.
Because the government holds majority.
Yes.
Okay.
Yes. It is actually, it's still a parastatal. But for me, let me just buttress the point that I am not impressed simply because this profit is coming on the back of a bailout. It's not organic.
You see, Kalia, you mentioned about you've mentioned the bailout, and then you mentioned that some of these things are not supported by unit economics, right? Because again, you're just going the British. No, I'm not saying what I was about to say. I'm not saying
He's about to say Bulov, the Russian Bulov, bro.
the backing. No, okay. The president.
Welcome to Russia, my brother.
The president. Yeah. So the president makes a populist statement and says that this should be done, the 15% reduction in cost of electricity, right? But the other thing that you're not looking at, which again does not make business sense, is in the suppliers of this electricity that Kenya Power is supplying. Because last year we had talks about the IPPs being asked, is it by the DPP? The independent power producers.
No, I think you're throwing around a lot of PPP.
Okay.
No, but there's a presidential task
but
force.
DPP wasn't in the picture.
So these guys were to come out and show who are the owners of this independent power
yes.
producing farms.
The beneficial owners. Is it beneficial?
Yes, the beneficial owners.
Yeah. So, and until that is done, all this is just hogwash and talk.
But do you know what? Easter? If actually it's shown that the beneficial owner, that let's say this company, blah blah blah, is owned by Daniel Kalia, that doesn't change anything.
Exactly.
It doesn't change anything. Because if you look,
it doesn't. But we get to see where the conflicting interests.
Where the potential conflict.
Exactly.
Exactly.
That's the only reason I'm voting for this to happen. Not because that once we know these people, they're going to be asked to reduce the prices.
But you know what?
But then the other thing is,
you can't tell
Kenya
them
Power
to decrease.
is not using competitive pricing in buying or selecting suppliers.
Okay.
Yeah. That's where the problem
is. That is granted. But then look at it this way. When you talk about competitive, and there is a lot of comparison, and we are talking about this at the same time with KENGEN, which is very good. Yeah. And there is usually a lot of comparisons between the IPPs and KENGEN and the prices. I think KENGEN sells at around 5 bob. There are guys who sell at 73, more than 100.
But subsidized.
But then now that's the point that I wanted to address.
No, that spread is too huge.
No.
Look at it, something and 5 bob. Kwani, how hugely?
Look at it this way. Number one, if KENGEN, they work knowing that if anything happens, number one, there is a bailout. Number two, okay. Do you know that KENGEN is actually heavily subsidized?
Yeah.
In the things they do.
Okay.
Do you know that there was this big issue about, and even CMA pronounced itself on this, that KENGEN didn't issue a profit warning, with the other results, and that because
how did that go?
The taxes. We talked about it when I think in episode 20 where Boni was here. Shout out to Boni of Mwango Capital, and CMA has actually pronounced itself that the issue they are looking at, they're focusing on PAT and not PBT. And do you know why that whole issue came in? It's because every year that KENGEN, if KENGEN in any financial year that KENGEN launches a new plant, they get tax rebates. So in that financial year, they had not launched any new plant. So they weren't given the tax rebate.
Yeah.
So you look at these kinds of subsidies that KENGEN is being granted. Can they? Do you expect that the guys in private sector who are not being advanced these subsidies to sell at the same price?
Yeah.
They can't.
These are guys who are getting, they're developing it at their own cost.
Yeah.
At not concessionary.
And then the concessionary financing that they get from IFC, AFDB that are advanced to KENGEN. KENGEN gets credit at 4.5%. You get it at 13% with your own private company.
Yeah.
It doesn't make sense.
You're making a comparison.
Yeah, so
he's finished
my point is that you can't expect KENGEN to sell at the same price as the private guys. The private guys are obviously going to sell at a higher price than KENGEN.
So you think these other prices are priced competitively?
Okay,
not all of them. Prices. Not all of them.
That's now what
because
back to your point.
If KENGEN is selling at 5 bob, right, and then a unit, and then these other IPPs, they have an average which is not so, which doesn't have a huge spread as the one as what they have, because what we saw is there's an IPP selling at 17 bob.
Yes.
There's another one selling for 70 some.
More than 100. Huge. Yeah,
that's too huge.
But then also we will
if all of them are around 17, 20, now you'd understand that if you consider all these factors, no one is getting, because it's a level playing field, right? Now it should be somewhere around the same place.
Based on Kalia's background, I want to hear his opinion on this.
Oh, yeah.
no. As in, it's so the thing is, there are different technologies. So if it's hydro, if it's geothermal, if it's thermal,
solar.
Yeah, but I don't. Is there a solar plant that is actively contributing to the
it's
grid?
It's actually mostly thermal.
Wind.
It's wind. We have wind. We have geothermal, and we have hydro.
And
thermal, the diesel powered plants. So the costs, the development costs are different for each, but thermal are the most expensive. Okay. Especially to maintain and to run.
Okay. So how much do we produce in Kenya approximately? Thermal, from thermal.
From thermal.
Yeah.
I just know the percentages, but I've forgotten them. It's actually in KENGEN stock of the week.
Yeah.
we mentioned it.
We mentioned it there. The point is to reduce thermal. We are trying to phase out as much thermal as possible.
Okay.
But thermal is not more than 20%.
Yeah.
That is correct.
Yeah. Okay. Although this year
so if it's expensive.
Although as per Kenya Power's report, for this year we relied a little bit more on thermal plants because there was poor rainfall in 2021.
Yeah.
And so
there
was low hydrology. Yeah.
Drought was declared.
So we had to rely a little bit more on thermal plants. But going back to how they work, so the pricing that are being paid, there are a number of items that usually come to play when you're negotiating. So for one, for KENGEN, the price seems to be fixed. I don't have an haven't seen the power purchase agreement between KENGEN and Kenya Power, but usually how you'd find it for some, especially for international IPPs who come to the market, when they're negotiating on the tariff, sometimes they agree on a base rate, or a base currency. So it could be USD. So you agree on a price and you say, we're going to be paying USD X per kilowatt hour. And assuming you put because for the international developer looking at a target of X USD per kilowatt hour, but Kenya Power is going to pay them in Kenya shillings, and then for them they have to convert. So enable to protect themselves against the exchange rates. So they factor in, you factor in an inflation portion of the currency that is going to be rising. You factor in an exchange rate portion as well. So you assume that the currency is going to be depreciating. So you agree on an index of sorts, where you say as the years go, we are going to be factoring in X% will be due to inflation. So it will be the base rate that we agreed on. So let's say it's 100 shillings per kilowatt hour, multiplied by whatever inflation,
and that has a huge effect on the price.
By if at the end of the day you're going to add or include an index to hedge for forex risk, use the dollar rate, because Kenya Power transacts in Kenya shillings. We all pay for power in Kenya shillings. So Kenya Power is going to be paying them in Kenya shillings, and not USD. So because they're going to be receiving the money in USD, they want to
they factor
this
in that,
so that when they're converting the funds to USD or whatever currency that they prefer, they've kind of protected themselves.
And that can be quite significant.
So you find that even for this IPP, the one that was probably at 77, because most concessions are, let's say, maybe 15 to 25 years, you find that at year 15, because I think for a number of them they have like 7 years to go, so they've used quite a bit of their concession. So you find at the beginning maybe they're paying considerably less, but because then
there's one that's going to 2034.
So you find that for that one, assuming it started a number of years ago, the shilling was at, let's say, 100 bob, or 80,
75
and then it's been depreciating.
Now we're at 140.
Once you factor in all these things that were negotiated in the PPA, then you find at this point we are paying significantly more. Then when you look at KENGEN, because they don't have such complexities, then, and it's also subsidized, then the price that they're paying is less. So I think there are a number of factors that come into play when it comes to
Dan, I'm looking at the outlook, of the energy space, in the national grid, and I'm thinking that perhaps the way to go in which we can really attain the low prices that the economy is yearning for, and especially guys in manufacturing, we at some point we have to do away with the take all pay model. I don't know if that's what it's called, where and this is what I mean by take all pay, that this IPP, everything that the IPP produces, Kenya Power must buy everything. Okay, so that's the kind of model that I'm referring to, and that model is really expensive, because you find that if there is sometimes overproduction, if it's hydro and it's during the rainy season where there is water, and all that, so there's a bit of overproduction, and that may not be all of it may not be consumed, so there's wastage there. So perhaps I'm looking at, we could explore the model, the cogeneration model, and I think I've talked about this before. So if you look at, for example, Strathmore University. So Strathmore have solar panels. So the model that Strathmore uses is that during the day, Strathmore uses Kenya Power. At night, Strathmore uses energy from the solar, which has been stored in batteries. So you find that they've integrated their solar panels to the national grid to the extent that Kenya Power, they take from the solar, from the Strathmore solar. So you find that at the end of the month, they come and find the net, because during the day Kenya Power has supplied to Strathmore. At night, Strathmore has
supplied
used
Kenya
itself and has also supplied to Kenya Power. So you find that at the end of the month, sometimes it's Kenya Power who's paying Strathmore and not Strathmore paying Kenya Power. So perhaps we could explore such kind of models in industries and all the other places so that we really do away with the take all and pay.
But when it is these independent power producers that sits in the board of deciding how those things should be implemented, it's never going to be implemented.
No, but
Makes
but
sense.
from an independent power producer's perspective, part of the reason why you would commit to undertake such a project or make such an investment is assurances that the power that you're going to produce is going to be bought.
Yeah.
You don't want the
Which is
the
take
flag-
all, pay.
Yeah, the
Yeah.
pay all the take all model.
Yeah.
Because otherwise, what's going to stop the government from coming to say we are not taking
Your power.
yeah, we want only 50, we are going to take 50% of your
Yeah.
power.
No, but I think the market-
messes
And it
up.
has to be long term because the initial investment is heavy.
Yeah, it's-
so if
yeah.
you hear for this one that goes to 2034 and the contract has already been signed, you know, and those price reduction and price those clauses. It can't be triggered because the president has said so. There has to be an outlier market effect, you know. So we are in it till 2034.
Yeah, sure.
Yeah.
But I think even those
Although
are what you
renegotiations are possible,
call, no, those are what we call on
If
but
it's
they're high.
consensual,
sometimes it's not. Sometimes governments.
There are
would-
terms you could walk
would-
out. You could walk out of such agreements, but the thing is, they're called onerous contracts in the sense that for you to get out, you have to pay crazy amount.
yeah,
Yeah, but
because
no,
the
no.
initial investment for these energy things is heavy, Dan.
No, but sometimes the governments would play. They will play dirty, basically. So they withhold pay.
Sometimes.
they will not
would-
pay.
yeah,
they start sending KRA.
Yeah.
Not even they'll just withhold payment for a long time, and then they come tell you, okay, if you want us, if you want to
pay-
get your money,
Yeah.
come let's negotiate
Yeah.
on.
Yeah, there you don't have an option.
No, you see what you said about Strathmore earlier, that the government might wake up sometime and say that we're actually not going to take your electricity. I think the market can control or manage itself, for lack of a better word, in the sense that you see those estates around Strathmore, Madaraka Estate,
Yeah.
all those areas, that area.
Yeah,
They could use the Strathmore.
No, but you need a license.
yeah.
You need a license from Kenya Power to do that.
Not even Kenya Power, EPRA.
April.
Yeah, you need a license from EPRA to do that. So because even case in point, Two Rivers,
Yeah.
Two Rivers have a substation, and
A KPLC substation or their
their own substation that they invested in,
Okay.
and they do have their own substation, and it's possible. It has the potential of even supplying
The nearby-
to Ruaka, supplying power to Ruaka. But for this to happen, they need a
license.
license from EPRA.
And I can just imagine the amounts that you have to pay to get
So
those licenses.
it's
Not amounts to pay, like amounts to pay in quotes, because you're not making formal payments.
No, to pay for the license, you have to pay for the license.
Yes,
you
but
pay,
you have
but
to
you have to
grease
grease hand.
Yeah, that's the other thing.
Which is why I'm saying, if there's someone who's seated in, you know, you get why we need these people's names to be outlined there.
Yeah, that's the other, because you are able to assess the potential areas of conflict.
Yeah, conflict of interest.
Whether you can be able to make an assessment based on this price that they're charging.
Yeah.
Well, there are these factors that could be considered, but there seems to be these guys maybe got a better deal.
Yeah.
Purely because of who's behind
Yeah.
the company. So that's why we would like to see.
But that requires political goodwill, and I don't think it's there.
I understand that for issues or factors like electricity in a country, the grid management and administration
Yeah.
they have security implications. So they are very sensitive, right?
Yes.
But you can't tell me that Kenyan security, that's too risky. Let me
Don't say it. Tufungie podcast.
You see, even the United States uses the model you just proposed.
Yeah.
So it's only dealings that happen under the table that are making us not get there.
Yeah.
Otherwise, it's doable. I understand the sensitivity behind the security concerns and all that, but we can easily have a grid that's dedicated to supplying electricity to all the state functions and sensitive whatevers.
Yeah.
But if we all if everything is done on the table, this is very possible to
You
do
know-
that.
you know-
because we have that exactly that model.
Yeah.
I was watching a documentary about Apple data station.
Yeah.
And they're not supplied. They don't get electricity from the national grid. It's supplied by communal solar systems. So this is something that's very doable.
Yeah. You know,
It's
Easter
just that we have.
Easter was about to talk about the government,
I was-
and you
No,
know,
that's an assumption.
Mutiambai doesn't send cease and desist letters. Just
But he's resigned.
Mnaenda mnaongea.
Mutiambai?
Okay.
Oh, not Mutiambai.
the
Not Mutiambai.
Inspector
Mombasa
General
Mombasa
of
is
the
doing
police.
you good. Hey.
So I
I
mean,
don't know why I confused him with this guy who's vying.
with Boynet,
Not Boynet.
No.
The guy who's vying for Tanzania governor.
Natembea.
Natembea.
Oh, the former RC of Rift Valley.
Yeah.
So I mean, before we move to stock of the week,
Yes.
KENGEN.
Yeah,
How did they perform?
KENGEN, similar
Those guys are stingy, man.
similar to
Rebecca.
to last year.
Stingy.
You're talking to
Dividend.
Rebecca like she's your sister. Oh, for those who know, Rebecca Miano, she's the MD and CEO of KENGEN.
Yeah, so it reported a 5.12 billion net profit for the half year ended December 2021. So this is compared to 5.05 billion reported in the same period in 2020.
So there's an increase in PAT.
Slight increase. Net profit. Slight increase. 0.07, 5.05 to 5.12. So 0.07 billion. So that's 70 million difference.
Yeah.
So they say the performance for the 6 months it remains stable. So it's mainly supported by increase from revenue diversification initiatives and overall
Ethiopia,
growth. Yeah, in electricity.
Consulting.
And
Yes. But although this is also part of the reason for slow growth. So they say the slow growth in profits was due to increased expenses, which were owed to increased business activities in Ethiopia, repairs and maintenance, and higher steam costs following the dispatch. Following increased dispatch from Olkaria geothermal plants. So operating costs increased slightly by around 1 billion. So it's now at 14.1 billion, and this increased from 13.1 billion in 2020. Although generally, when you look at the top line, the revenues was up 14%. So to 24.8 billion from 21.8 billion, and this is mainly due to higher revenue receipts from drilling consultancy operations outside Kenya.
Do you know what, Dan? I'm actually I'm really happy that revenue has increased courtesy of diversification. This is now in terms of geography and the consulting that Easter was talking about, consultancy. And this, I'm really happy about that. I think that the leadership is actually attributed to this, because for me, the last thing that I would ever imagine about a Kenya parastatal is venturing out of the country. So I mean, I'm happy that it's now being reflected in their books. I'm actually comfortable with the increase in operating cost. That is, because of the setting up the teams in Ethiopia and Djibouti. You'd understand that admin costs there, and having now setting up probably offices and all that, so that whole infrastructure and dynamic. For me, I'm comfortable with that. I would have been afraid if I had that it's the finance cost that has shot up, but
finance cost,
I'm always worried about finance costs.
Yeah, finance costs declined by 27%.
That's what I wanted to hear.
This is from 1.2 billion to 897 million.
Talking on the flip side though of the finance cost, that is the interest income. So interest income, not finance income. Interest income, yeah.
Interest income,
Interest income. Yeah. So do you know the model that works?
Okay, how
So
do they?
Let me simplify it a bit.
Sure.
So the model that happens with law firms. So with the law firm is, if you have a client who you're representing in court, they don't pay you when you go to the court. They have to pay you upfront.
Yeah.
Right. So the client gives you like $1 million bob. Now you'll be deducting your fees. The Ikisha, he replenishes it. And then that's how you move.
Yeah.
So you see, the $1 million bob is not your money because you haven't used it yet.
Yes.
You haven't earned it, sorry. You haven't
I haven't earned it.
So but it's in your account.
Yeah.
And your bank does not know of this client. So the bank treats that money as yours. So your account earns the interest. on money that's not yours.
Yeah.
Right?
Okay.
So when it comes to Kenya Power, KENGEN, they have the same model applies. You're paid, so you're working for the Ethiopian government.
Yes.
They, for a particular project, they send you money. They send money to, they deposit funds to this account, and then it earns them interest.
Oh,
As
and then
they use it for
they
the
deduct it for the consultancy.
Yes.
And all that.
So that's how it arises, the interest in.
Interesting.
And it's crazy. I can't remember the figures, but it's quite some.
Yeah, because it increased 22%.
Yeah.
Finance income.
Yeah.
So it's now at 1 billion. They earned 1 billion from basically just playing with the amount that they receive in the cash receipts, the cash balances that they receive.
Are they putting it in an MMF?
Fixed deposit. I'm sure it's
Sounds
negotiating,
like a job.
negotiating fixed deposits with banks. MMF, and I'm sure they also play with short-term bonds.
Hey, no, you can't play with your customers' money like that.
No, short-term bonds. Why not?
You can do a 90
So
day.
you know when you have your budget on when you're going to spend. So if you're going to spend
the
it
thing
4 months
is,
down the line,
okay,
why
no,
not
that's
put in a
fully
3 months
dependent.
bill?
That's fully dependent on their CFO and
It's their cash flow, their
but
treasury.
I guess there are limits.
It's their treasury
You
department.
can't
basically.
like
no, by saying it
invest
depends on
in
the CFO and the CEO
in
and
the high
the board,
yield. You just
I'm saying in terms of risk appetite, because these are the decision makers. So if they, for example, if you're sitting in the same board, you'd be advocating for us to put the money in the bonds. Me, I'll be like, let it be.
Yeah.
bond.
I'm
Because
saying it's possible to do that. That's what.
it's possible, but I
it's one
guess
of the avenues that they
but I
could. We
guess
don't know what they're doing.
and there should be limits. There should be limits. Because if you had invested in a high yield fund
of course,
somewhere,
it needs to be very. They need to be
I don't
safe.
want to go into details. You can imagine.
KENGEN.
Although, unfortunately,
After season desist by force.
they do not recommend a payment of an interim dividend. So
Exactly. Me, I saw that. And you see, the thing is, they have the money. The retained earnings currently sits at 11 billion. Why not paying people dividends?
I would accept it if they're saying they're using the money to
No,
to diversify.
that's what they're saying. But do they need money to?
I saw there were stories of them getting
Because
into
if
water
you're
bottling.
Do you know? Yes. This is now
How
in
much money
their
does that
plant
cost?
in Olkaria. So from the steam, they and actually they've been able to get a lot of water underground. So now they're developing their bottling. I think they've already started. And then of course there is the spa in Olkaria, so you can visit there in Naivasha. You go to the spa, nice swimming pool, a place where kids can play. It's a recreational space. Interesting, fantastic.
I think the bottling plant, because it's vertical integration, it can
Yes, it's actually vertical integration because they have the steam.
Yeah, they have the steam already, which is going to waste, so they might as well bottle it. And it being a state-owned
the more reason they know
enterprise.
they don't need a lot of money to do it.
No. Actually, you see all this diversification. For me, if I was sitting at the KENGEN board, I wouldn't recommend a dividend. And this is why.
Stingy one.
That's what I'm saying. That's what I'm saying. Like for me, I would be comfortable without a dividend, knowing that they're diversifying.
Yeah,
in this sense.
I mean, do you know what? I mean, venturing out in these countries like Djibouti, Ethiopia, and other countries. We saw from the map, and we had a lengthy discussion about this. I think they're moving into more than 10 countries in the region. We had a conversation about this in Stock of the Week of KENGEN. Of course, you can check that out. And now moving into these countries, there are usually a lot of initial costs. And do you know why? For example, Equity Bank. Why have they not been issuing dividends? Because the expansion to places like DRC is costly. So I'd understand why.
Yeah,
it's not like they've been issuing so much dividends before.
Easter on this episode is the new dividend guy. Yeah?
Anyway,
I'm looking at the just before you go into that, Dan. I'm looking at their share price. Closed on 4th of March, 3.88. Still below the 52-year high of 5.1, but we'll see how it goes.
Wait, they've been at 5.
Yes.
What? You sure?
Yes.
In the last 1 year?
That's their 52-week high.
5.1.
5.1.
Okay.
Yeah.
Okay.